have the latest GDP figures from Turkey at the top of the hour. Well, we had them at the top of the hour, and this is actually what we got. Now, in terms of that GDP, it is actually gaining. The country entered a recession back in 2008, but that's a distant memory now. It completed its seventh straight quarter of growth at the end of last year, expanding 9.2% from the same period a year earlier. Now, a credit boom is responsible for a big part of Turkey's growth story as the country gets turned on to borrowing. Now, credit in the economy is expanding by about 40% a year. Now, that's been great news for Turkey's lenders, such as Akbank, Turkey's biggest financial institution. Its loan book expanded by 33% last year, sending profit rises despite increased competition. But the good times are coming to an end, and Turkey's central bank wants to restrain the boom to avoid overheating. It's ended its series of rate cuts, and since December, it has raised deposit requirements twice. Now, that's biting into lenders' margins. Goldman Sachs this week cut its price target for Akbank. Among others, it even advised investors to take their money out of Turkish banks altogether. Well, for more now on the Turkish growth story, its credit issues and its future prospects, I'm now very pleased to say I'm joined by the chairwoman of Akbank, Suzan Sabanci Dincer. Thank you so much for joining us today. Now, just 50 minutes ago, we had that pretty incredible figure of GDP in Turkey. A lot of other countries here in Europe would be jealous of that 8.9% increase. Is there a worry, though, that the economy is overheating?
Well, the number of Turkey shows the dynamism and the growth of the country. 9% growth last year is, I think, a very strong figure. This year, we will be having a growth. We are expecting a growth again.
And in terms of what your biggest hope, but also the biggest challenges for Turkey, is there a concern that a lot of the cheap money, especially coming from the United States, will have an impact on Turkey?
Well, in Turkey, we will have a growth this year, most probably around 5.5%. Because the economy was overheating, the central bank took the right measures, and they will continue with the measures, maybe with some additional measures as well. But I think in the long run, we have to have a sustainable growth. So I think the measures were right for the continuity of the country's economical sustainability.
And so you think this kind of trend will be sustainable? We're going to see the economy ticking along nicely, 6, 7, 8% growth for the next couple of years?
As long as we have the financial stability in the country, I think Turkey will continue with the economical growth, because we have all the necessary right figures. As you know, it's a very young country with the average age of 29, very dynamic real sector, very strong banking sector with the average capital adequacy ratio of 20%. Yes, I believe that in the long term, as long as Turkey has the financial stability, we will have most probably a rating up as well, and the country will continue to grow.
Talk to me about the challenges for your bank in specific, because we have so much concern about the banking sector in general, and we have had doubts from some of the international investors about a lot of the emerging market banks. What would you tell them right now?
The banks have done very good in Turkey. They have a very clear balance sheet, very transparent balance sheet. And when you look at the return on equity ratios of the banking sector in Turkey with the leveraging times, the sector's leveraging ratio is 7 times, so it is very low. So when you look at the balance sheet construction, the asset quality of the sector, I think, again, Turkish banks are the very rare banks to invest among the world conjecture.
But what is your biggest fear for Akbank, and how worried are you about inflation and market volatility?
Well, the inflation is, of course, this year might be around 7% because of the oil prices. Well, this we cannot. We are also following the oil prices, and today, with the present figures, we are expecting 7 and 7.5% inflation rate. But as Akbank, we believe that in general we will have a proper profitability of this year, and we don't have any worry.
And so what is there a division which poses you the most worry for Akbank? Do you have to take some provisions? Or here in Europe, we're talking a lot about recapitalization of banks. Is there a similar problem that you'll face down the line?
Not at all. We have a very strong asset quality. Our non-performing loans are very low. As a sector, it is very low. So we don't have any asset quality problem at the moment. We are very low leverage, and our loan-to-deposit ratios are at a very good level, around 75%. We are funding ourselves with the deposit base, so we don't have any problem. And this year, again, we will be expecting like around 15%, 16% ROE.
Suzan Sabanci Dincer, the Akbank chairwoman, thank you so much for joining us.